Good morning, everyone, and welcome to the Morning Edge. I'm filling in for Blake this morning. If you were listening yesterday, Blake went to the Coldplay concert last night with his family, so he was going to come in late, so it was going to be a little bit tough for him to come in this early this morning, because usually he gets up around, I think, at 3 o'clock or 3:30, so he would have only gotten probably about 3 hours of sleep, but he'll be in for the Lunch Money webinar. I'm going to keep this up here because this way people will know. People will be coming in wondering what happened to Blake. So this way, if I have the posting here, everybody know what's up. So we've seen some sustained dollar strength permeate through the market. It's been relatively quiet, really for most of the week. But we've gone and dripped from those highs, at least in the euro dollar. We've also punched to new highs in the cable. I was discussing with some people in the chat room. We did go on and get above that 32.23 on a 4-hour close, or right at it, which augured for even higher prices, which are, the closing prices are very key on these intraday bars, at least on the 2-hour chart. And we are seeing the Swissy push to newer highs. We did make a run up to, I think it was 52, with 96.55s at 38%. So we're seeing, like I said, continued dollar strength come in. Gold's remain a little bit weaker. We did pull in for those levels yesterday. It's a slow day, so I'm going to go on and take the same breaks that Blake does. Quite often when I fill in for break, I'll only take 2 breaks. One at the top of the hour. One at the next hour. But this time I'm going to just go, because it's such a slow morning, there's just not really any real news. It's going to have to really stretch out the show. We'll go on and use the same format that Blake does. When he takes his breaks right before the half hour, and again right before the top of the hour, and again the next half hour. So go on and let me know. Obviously, I always follow. The markets I primarily follow are going to be the majors, gold, crude, and a little bit of SPOOs. I don't follow cross rates that much, but obviously when I do Blake's show, I do, because everybody's following. A lot of people here trade cross rates, whether it's the Aussie yen, the euro pound, or the guppy. So if y'all want me to take a look at something, we can certainly go on and do that. Once again, there's not a whole lot of news. As far as in the currency markets, everybody's kind of, sitting back waiting for Jackson Hole. So we're just kind of sitting here doing a whole bunch of nothing. Euro's on its lows, but I do think that there's a possibility that we could just drip lower. And I was mentioning a couple of guys in the chat room too, I think we could just see the euro drop on just plain old complacency, because this 1274 area here in the euro /1270 is a pretty decent area. So people are probably thinking, okay, well, I'll get long there. And we did pop up to about 82 or 83, and now we're starting to come back again. They may think, okay, well, then I'll definitely buy it as we take out 70. And I think we should just keep on dripping lower, potentially. And 1245 is at 38% of the range of 1046 to 1366. And I wouldn't surprise me if later on the New York session we just don't slide down there. So you need to be cognizant of that. Being a slow August day, I think that's a possibility that we could do that. And you're seeing that right now with the Swissy on its highs, although 96.55 is at 38%. I like following the Swissy lately because it caused some good turning points in the euro. Cable has really pushed to a very key level. So you're seeing this across the board. We've even seen Aussie push higher, ran into a little bit of resistance here at the 76.30. But we'll take a look to see what we have as far as news. There just really is no real news, but and generally on the European crossover, we'll look at any news first, and then from there we go on and look at any key reports, and then from there, and then we take on the charts. So Says the dollar crept up on Wednesday after falling the previous day, was unable to break out of its recent trade ranges. And investors focused on gathering in central bankers when the Fed will raise rates again. And analysts said that the Tuesday that showed the new U.S. single-family home sales unexpectedly rose in July, reaching their highest level in nearly 9 years, and helped the dollar marginally. You know, this report was expected to come in weaker, and not weaker because the economy's slowing down, but weaker because we've got some supply issues. And that's what I keep telling people. People keep griping about how the economy is weak or it hasn't come back. And I mean, all you have to do is look at 2008 and look where we are right now. And I mean, here you are right now, the new home sales rise to their highest level in nearly 9 years. Unemployment down, below 5%. So, I mean, hard to go in and argue that the economy hasn't come back or the Fed hasn't done a relatively good job in my book. Some people want to take the other side of that, but I mean, you look at the mandate, you look at the economy, you look where we're here from 2008, looks like they did a pretty good job to me, you know what I mean? It says recent hawkish events from Vice Chairman Stanley Fischer and New York Fed President William Dudley have some investors' expectations that Yellen might signal that the interest rates could rise as soon as September. I think that Yellen is going to say she's open to it. And once again, I'll stick to my guns. If we get an NFP of 245K plus, that's high, and I don't expect it to be that high. I really don't. But if we get it at that amount, and a hourly wage gain of 0.3, they're going to hike. I can tell you that right now. I can tell people, like, you can take that to the bank. They will hike. We get 245K plus NFP and wage gain growth of 0.3, they will hike. Like I said, I don't expect them to hike, but if we get that, they will hike. We're so focused on what guidance we might or might not get on Friday that we're just really drifting around these ranges at the moment without any real direction, says RBC Capital Markets currency strategist Adam Cole. Markets are pricing in around a 21% chance of a hike in September, but a 50% chance of at least a hike by year-end, according to CME FedWatch. Minutes from the July 26/7 meeting showed officials were divided on whether to raise rates soon, with some insisting that more solid economic data was needed before tightening. Okay, get this. With some insisting that some solid economic data were needed before tightening. Okay, look at this. New U.S. single-family home sales unexpectedly rose in July, reaching their highest level in 9 years. If we get an NFP of 245K plus, I mean, could be higher. I say 245K plus, and wage gain growth of 0.3. I can assure you they will hike, and the dollar will take off like a banshee. I'm just telling you right now, saying it right now, because if we get that, then, of course, everybody's going to be, nobody says they're going to hike, but like I said, they're going to hike if we get that. I'm just saying this, like I said, it says it right here with some, arguing or debating, hey, we need to see a sense of, stronger economic data. Some insisting more solid economic data were needed before any tightening. If we get 245K plus and then wage gain growth of 0.3, that'll be 3 back to back to back, almost 250K jobs. I mean, obviously the other month was 287, this one was 255, and you get 245, that'd be right at 250, be averaging at 250. Matter of fact, if they get something like 235, you look at the 3-month average, that'd still be 250. So I'm saying is it's going to be hard to argue that. My forecast is for the next few months is around the current range because investors are worried about economic uncertainties and the U.S. election is coming in November, said Harumi Taguchi, a principal economist at IHS Markit in Tokyo. Like I said, if they get that, they're not going to be able to hide. And I'm not saying that they're hiding at all, but I'm saying they're going to have to raise. They're going to have to raise if we get that kind of data. I don't expect them to raise, but if we get, because I don't expect the report to come, I think maybe the report might be like in the 2 teens, maybe. But if we were to get that, it's on like Donkey Kong, like Blake likes to say. Okay, coming into here to the U.S. session. Let's take a look here. We get existing home sales and EIA crude stocks. And that's it. EIA crude stocks, y'all know, it's 10:30 Eastern Time. Stephen and Walter say good morning. And good morning, guys. So all we have really is just existing home sales. But that's a pretty good number on that new home sale because that was expected to be lower and not because of the economy, just based on supply. So that really says a lot. And I think what people are missing is David Shaw posted something about a month and a half ago, maybe almost 2 months ago, was the raising rents. And it's driving people back into homes because you're paying so much for rents that it's just better off to just buy the home. It's not like in 2008, people trying to buy homes to flip them. I mean, rents just continue to rise. So, like I said, with that, people are just going into homes now. Let's see, tomorrow we get Spanish GDP, Germany IFO numbers. We get durable goods. Like I said, that's tomorrow. Okay, so let's go on and move into the charts. And I'm going to move this because I know ultimately people are going to be asking, where's Blake? So it's just easier for me just to have this posted there. Hang on. Okay, let's go and take a look here. We'll start off with the euro. Now we've come up here. This is 1365. We made another run up here yesterday, and like I said, I had taken forays against the euro up here in the 50s and 60s, and we've had some nice day trading. But I tell you what, yesterday I wasn't pressing the euro at all. I wasn't sure how they were going to play this thing. Blake actually, I believe in the chat room, he got short. Someone here, I don't know if he's still short, he covered or whatever. But I guess from just a technical standpoint, you had this very nice bar right here. It's a little bit too long for a gravestone doji, but the close is like a gravestone doji. And so if you look at this from a technical standpoint, but this was in Europe. It was overall a pretty good area just to go and short it with your stops just above. But we've dripped lower. My concern is, as we've come lower, this 1274 area is a good area for shorts to go in and lay off. Close out the positions. But my concern is I think that people are maybe trying to go long the euro, and because they're thinking, okay, this is a good area, I'll just go long. And we did pop up a little bit, but we're continuing to go in and struggle. And I think that we can go in and potentially we could slide here later into the New York session as we just continue in this quiet trading. We could start to drip lower and just drip lower, drip and drip and drip until potentially we get to 1245. We'll take a look at that. see we have another level here at 1270, but I think there's a possibility that we can end up just start dripping lower. You know, what may happen is we just can't find any buyers in here, or there's not so much buyers, it's just that we just can't find any commitment to participate. You know, I mean, people are saying, you know, I'm just going to go on and wait till Friday, Jackson Hole. I'm going to wait till Monday. Once everybody starts to, some people start to get back from holiday, and we just start dripping lower, and we could just drip lower here in the 70s, maybe push them a little bit lower into the 60s, and before you know it, shoo, they just slide right down here. Now, 1244 is the 38% of the recent low, which is 1046, okay? Right in here, that was that low, all the way up here to 1366. And we'll just go and post it just so people can see. Blake and I had a little discussion yesterday regarding the Fibonacci. So you're going to see the most recent significant low. You see that here after the market rallied all the way up to, what, 1232. That was actually the 61% of this move. I think it was up to 1428 or whatever. But we'll go and come here and to this high. So you see you're marking, some of y'all probably already know, but for those that don't know, you want to go and use the Fibonacci from the most recent significant low to the most recent significant high. Obviously, if you're looking at intraday, you might end up using the fib from here to here. But, I mean, intraday. But overall, this is what you'll look for, and you can see here, 1244 to 38%, right in here. So, generally what I'll do is, I'll go in and mark off my fibs. That way, if all of a sudden the market, obviously today it's, you know, somewhat more pronounced because we're seeing, or I should say we're seeing this pronounced, you know, drip lower, we'll say a massive sell-off. But if the market were to, you know, dawdle around on a regular day and I had already had this marked off, and let's say the market slips on the bar slope and drops down here, I've already got this marked off. I already know, oh, okay, wait a minute, they're falling, they're coming into a key fib, and I'll be looking at other factors or other levels, and that's going to be this 1215 to 1257. I've had that marked off from a long time before this 15 minute. I could go further back, but it's going to have, you know, push it too far back. But the significance of this 1215 here to 1257, and you can see on the way up, we got above the 15, we struggled, okay, and then once we started to lose the 15, 1215, you can see that we, you know, headed on down. And then you can see on the way back up, this is an area of consternation for the market, which is right here. You see, even though we got above the 1257, the market came back into the 1257. We rallied up here, and where did we come back for support? 1257. We overshot a little bit, but we were able to come right back on the very next bar, and you can see that here. And then the market diddled and dawdled around. We kept, you know, hugging this area, which was previously resistance, which is support now, right here at this 1257. And then we took one last dip. Right in here, you can see how the market came back very strongly. Come back down, obviously we turn around and start moving higher. Now, we did go in and get a sell signal from a momentum side, you know, right up here, right around 1330, 1332. You can see here that my EMAs work out pretty well because, you know, here's your buy signal, staying along the whole way. You have to factor it in with levels and fibs, but you see you get the sell signal here and it stays on the sell signal this entire way until we flip to the buy side with the faster EMA crossing over, stays this whole way, and then we flip to the sell side. And you can see how the market's just been tracking it lower, lower, lower with the slower exponential moving average. But like I said, my concern is you probably have some complacency here where people say, you know, this is a pretty good area to buy right here. I'll just buy it. And, you know, or if not, you know, I'll wait till it gets down close to 1270. But my concern is the market's trading so quiet, we just may continue just to go on and drip a little bit lower before we know it, we're dripping into the 60s and pushing in the 50s, and people are thinking, well, where does it stop? Well, I'll put my stop at 55, I'll put it at 52, I'll put it at 48, before you know it, we're breaking the 50s. And I think that could happen. It could potentially happen today, maybe even into Asia. That could be where we go. I'm not suggesting you should get short now, because it's a little bit late, to be coming short at this point. But I think this would be an area where they could potentially go in and come in, and then we'd probably see a very nice bounce from there. At least enough of a tradable bounce from that 1245 area. Now that's here on the 15-minute chart. My EMAs are really based on the 30-minute. It's the same EMAs I've been using for a long time. On my 30-minute, I just adjusted them for the 15-minute because I thought, if I'm going to be day trade scalping, I want to be on a little bit shorter time frame. And, looking at FX on a 5-minute, 10-minute is just a little bit too short of a time frame. I want to be able to move in and out, but I don't want to get lost. You can't see the forest for the trees when you're trying to look at a 5-minute. So we'll move back into the 2-hour. So you can see here that this 1255 is the top of the zone. Now we talked about the 1244 being the 38% in here, and 1236 is actually a level also on the 15-minute. But what could happen is we could start to drip, and the market may try and hold this 1255 a little bit, but we could slide back below the 1245, get down to 1244, the 38%, and pop back up above this 1255, and then possibly go and make a run back up here, which would then be resistance. The 1274. It's just that the market, we're just not finding, we're holding in here, but you're just not finding any buying power at all whatsoever. No oomph coming off of that. Maybe you'd see like a little pop, take us into the upper 80s and come back, and we're just not seeing that. We're just truly, this is a 2-hour close. We're truly struggling here to get any type of a rise. You can see here, we just can't, at least if we would have made it up in here, up in the upper 80s and say, okay, they're coming down here. Now they're going to use a dip to take out this stop and then come down here in the 70s and come right back up. But you can see that we just can't get any oomph on this market, none whatsoever. So, and in this type of quiet trading, to me, in a quiet trade like that, it's just much easier to go with the flow or the initial direction. And that's what I'm afraid is that we could continue to go on and drip right here and just start dripping and dripping, and then we hit some stops, and then we kind of stabilize, we drip some more, and before you know it, we're sub 50. And I think that that's going to be a decent area at that point. Now, one of the things that I'm looking for that's kind of giving me that idea is here on the dollar Swiss, the Swissy. And as I mentioned before, I've gone to using this or closely monitoring this because it's actually helped me catch some very good turns in the euro because, I scalp and day trade a lot. And quite often I don't hang on to my positions for a long time. But I'm always looking at confluences, like when I'm looking at with the euro, on my screen at the same time, I'll be looking like, what's the cable doing? What's the dollar CAD? Obviously, with crude and the dollar CAD, quite often close relationship. It's kind of disjointed over the last 24 hours. But look, for the most part, it's been spot on with the dollar CAD, the way it's been traded as a proxy for crude. And I mentioned, of course, the dollar yen and the Aussie dollar here. But like I said, what I'm looking at here is on the Swissy. And, we'd got long down in here, and we were saying, hey, if it takes out 96, it's going to really help our euros. When we were short euro at the time, which was when it was at 1350, and then we got short towards the close of, a few days ago, and it jumped up. I think that was Thursday. And it jumped up to 64, and the Swissy was coming back up. And I thought, hey, look, if we can get above 95, 97, we can get a 2-hour close. We can really, get this market moving. And we did, and our target was 96.39, which we got a little bit above it, stopped at 49. The market made another run up here for 52. We dripped back down, and here we are back up here. So right now, the key area is this 96.55, which is a 38%. And I'm keeping an eye on this at this point. This 96.61 is just right here at this level here. There really isn't, we're kind of hit an air pocket. I mean, if you were to get past this, this might be right where the euro gets into some trouble, and ultimately the euro ends up pushing down to around 40, which is if we hit this area here and we quickly jump past 80. I think we'll run out of gas at that point because there's some good volume in here. But the Swissie's holding up overall. So if you see the Swissie holding up overall at this point, there's no reason to go and be buying the euro. That's my take. And you can see on this 2-hour close, that's a very solid bar. You see what I'm saying is you took out this close, this close, this close, all this right in here. That's right. So that augurs for us to push higher. Doesn't guarantee it, but the percentages are in that direction. Now, we've got the 96.55, the 38% in here. So that might go on and provide a little bit of resistance. So I'll keep an eye on it. But for the most part, at this point, there's just not a reason yet for me to be buying the euro. I mean, now, like I said, if we flush up in here at 61 and then the market is having a lot of trouble, you see right in here, and then I'll go and take a look at the euro. But right now we're seeing good strength even here in the cable also. And we're already coming up time for the for a break, because I'm going to go on, like I said, it's been a slow 24 hours. There's not a whole lot, so I'm not going to take us all the way up to the top, and so I'll just stick to the way that Blake's been doing it and taking the breaks when he takes the breaks. Basically stay on, on target with how he's been doing it. But like I said, you can see the Swissie still remains in good shape. So you can see here, if they want to go and take out this area with the 38% and this area, let's see what they do there, and I'll take a look. But right now, euro continues to remain weak. You can see here, at the same time, the dollar Swiss continues to remain strong right here overall. I'm saying we do have this this key fib, the 38%. So I'm cognizant of that with this 96, about basically 96.62 level being right here, because that would take out the prior two highs. I'd like to see what the market would do at that point. But like I said, I think there's just too much complacency right now with the euro, and people have to go in and be careful. So that's, like I said, I think that that's, at that point, we'll see what it does. But that's my concern, is that we could go in and work a little bit lower here, and that's going to cause some issues here. And I think the people may just be stepping in thinking, okay, yeah, it's a good buy to buy the euro. And I think they may have jumped the gun a little bit, and we're just not seeing the action to go on and correspond with that. So I think you have to be a little bit careful here, especially with this August trading. There's just not a lot of participation ahead of Jackson Hole. So I think you really, truly have to go on and be very careful with that. We're going to go on and take a quick break, like Blake does, and basically stay with the format because it's a quiet day. We'll cover the rest of majors, then we'll go into the cross rates. We'll obviously take a look at gold. If anybody else has any other markets they want to go on and take a look at, we'll certainly go and do that. So we're going to catch a break, and we'll be back in a few minutes. Wrap up the majors. After that, then we'll go into the cross rates and gold and any other questions anyone else may have. And thanks for joining us here on the Morning Edge. Blake will be back for the Lunch Money webinar. Okay, so we'll catch y'all in just a little bit. And thanks for joining us here on the Morning Edge.